It's time for the Your Personal Bank Show with Ference Toth, financial literacy educator and speaker, entrepreneur, and chairman of the board of a bank in formation. Take charge of your financial future with your personal bank. Now here's Ference Toth.
Certainly seems to be the Federal Reserve. Now, the one thing I want to say is, of course, they're increasing interest rates, and some of the comments that the chairman, Jerome Powell of the Federal Reserve, stated recently, where he said, rates signaled rate hikes may be longer and larger in the coming months, and of course, that's because the Federal Reserve is finally, appropriately, recognizing that inflation is out of control, and they seem to be committed to attacking that and attacking it through raising interest rates, which of course is what they need to do. Now, one of the things that's happened is I've had a number of listeners reach out to me recently, and I don't like hearing this, but they said, look, you were right, because if you've been listening to this show anytime, you know I've been saying that inflation is higher than the government is really telling us, and is not transitory or temporary, and is going to be around for a while. And finally, the Federal Reserve is recognizing the same thing, far belatedly, unfortunately, but finally they are. And if you go back in history, and I'm a bit of a history buff. My wife would say I'm a big history buff. And one of the things, if you go back to the economy of the 1970s, which is the last time we had a high interest rate environment, and inflation was finally beaten, crushed, if you will, by the Federal Reserve. And if you remember, if you go back, if you didn't live it, you can go back and see that, rates hit upwards of 20% at one point. And the Federal Reserve aggressively, strongly raised the rates. And the reason they did so is they finally came to the conclusion and realization that interest rates had to be higher than the rate of inflation for inflation to finally be beat or go away. And if we listen to the government numbers, the consumer price index numbers, for example, they've been floating around 8.5%, 9% for the last several months. So what that tells me is, if the Federal Reserve is serious about beating inflation, and at this point they certainly seem to be, that's all their indications of what they're stating, and again what they're doing, then we're going to see federal funds rates. We'll see prime rates in excess of 8-9%. Now, the prime rate typically is about 2 or 3% higher than the federal funds rate. To give you an idea, for example, about 3% is pretty typical. And let me give you an example, a recent example. So as recent as March of 2022, the prime rate was 3.25%. Now, that, if you don't know what the prime rate is, that's the Wall Street Journal prime rate. It adjusts monthly. And that is the rate that is basically, I should say this, it's considered pretty much the rate that someone with really good credit, the cheapest they can borrow money at, okay? So, for example, if you remember, it wasn't too long ago, in spring of 2022, if you had really good credit, you could get a 30-year fixed mortgage in the low 3%. I even saw some high 2s, actually. And again, the prime was 3.25%. So right around that 3.25% range. And 30-year fixed mortgages are usually, not always, but typically, one of the cheapest, lowest rates someone can get, a borrowing rate. 15-year can be a bit lower than that, but you see what I'm trying to say. That same 30-year fixed mortgage today is about 5.5%, and prime is at 5.5%. Based on what the Federal Reserve is telling us, they're going to raise rates probably another 0.5 point to 0.75% here in the next month. We're going to see 6% mortgages again. That's for people with great credit. In other words, mortgage rates will have doubled in less than half a year. That's the aggressiveness of the Fed raising the rates. Now, why is this all so important? Well, it's important because high interest rates change the economy and investments and assets in significant ways. For example, I was sharing, I was talking with a mortgage broker client of mine recently, and as he even stated, higher interest rates, there's winners and there's losers. Okay, typically the stock market in general does not like high interest rates because the cost of borrowing money goes up. It's more expensive to expand, do business, all that type of stuff. So in general, you've seen the markets go down. In fact, when Jerome Powell this past week or so was stating where basically the Federal Reserve is going to have to inflict more pain with higher interest rates, slow growth, and things like that to tame inflation, the markets reacted very negatively. Okay? That's very common. So my point is, I've been saying this for a while, over a year now, but now the Federal Reserve is finally saying the same thing, that high interest rates are probably going to be higher than most people think and are going to last longer than most people think, which means the stock market in general is going to suffer more and longer than most people thought. Real estate's going to be affected. It's already starting to get affected. It will get affected even more so. Again, as most people were thinking. I like to say experts. Here's the thing about experts. When they say the experts, it's amazing to me how often the experts have been wrong, particularly recently in the last few years. I can't say all the reasons why. I think one of them is it just seemed to lack a lot of common sense. To me, it's just basic common sense. It doesn't take rocket science, but it just their views are colored, or they have political or other ambitions or influences, or they're living in a bubble. I'm not sure exactly what it all is, why the experts have been wrong on so many things so often. But again, they're wrong here again. Janet Yellen was one of them, where she was like surprised about inflation. Anybody who's paying attention wasn't surprised, in my opinion, but whatever. These things are very important to understand because, as I've been saying on this radio show for some time now, like I said, for over a year, inflation ain't going away anytime soon. Even the Federal Reserve is saying that. High interest rates are not going away anytime soon. In fact, they're still going up and will be higher than normal for quite a bit longer than a lot of people were expecting. And that's something I need to share. I was sharing this with a client too, and a few other folks. It's amazing to me, and this is something that took me many years to realize and figure out. But it is amazing to me how strong the comfort zone is in human nature. In other words, we as human beings, we get so used to the way things are. We easily get used to a certain way things are. And a great example economically is, of course, low interest rate environment for about 12 years. After 0809, or I should say around 0809, the Federal Reserve dropped interest rates to historical lows. And for the most part, kept them there for the next 12 years. Far longer than many, even the Federal Reserve agrees today that they should have. Okay. So easy monetary policy became the norm and stayed that way for over a decade. Of course, the results of that was we had a historic stock market rise. We had a historic real estate market rise. And some other assets like cryptocurrencies and things like that saw tremendous historical gains too, because of the easy money. Lots of money cheaply accessed, which creates winners and losers. The losers in that arena, by the way, were interest rate sensitive assets. Interestingly, things that I was dealing with in my career with annuities and life insurance, dividend paying assets and bonds and those kinds of things really struggled over the past 12 plus years. In fact, the dividend rates, the interest rates were the lowest levels that this country has seen in the history of the United States since 1787. I mean, that kind of puts things in perspective a little bit. We had the lowest and longest interest rate environment in the history of our country. And these companies that were providing dividends, like these high cash value policies that I've dealt with, were going through the lowest, toughest period for the longest amount of time in their history. Okay? And many of these companies, well over 100 years, like I said. So, about half of my career, by the way, this is my 23rd year, roughly half of my career, I was dealing with products in their worst time ever in terms of results, or I should say returns. Now, the fact that we're still working, still making 575 dividends at this point, frankly, they're going up, folks. They're going up probably pretty strongly, pretty rapidly, because these companies are now on the upswing. Stay tuned in the next segment, and I'm going to share with you more about this and why this is so important. Contact me at yourpersonalbank.com for more information. I have to really apologize there. I thought I was up against a hard break there. I was like, and my sound engineer was waving frantically. I've got 2 more minutes. So again, I really apologize on that. The key is, again, we dealt with this lowest in history environment in terms of returns, dividends, and all that. Yet they're still paying 575 dividend, insured, guaranteed, tax-free, and that's going up. That's on the upswing. Historically, 7-8% is the norm. So the way the Federal Reserve is increasing dividends, I should say increasing interest rates, means dividends are going to start moving probably pretty rapidly towards the norms. And we've all heard this: buy low, sell high. Interest sensitive assets are on the upswing. And it's no secret, the stock market, for example, has had the worst first half of the year since 1950. Things are rapidly changing. And if you get stuck in that comfort zone, as I was sharing earlier, which is so easy to do, you're going to react too slow. So I'm really going to encourage folks, like I said, to contact me at yourpersonalbank.com. Let me share with you some of the things that are going on and how you can reposition your portfolio, your assets, your investments to take advantage of this rapidly changing economic environment, this rapidly changing interest rate environment, inflationary environment, all of it. So again, contact me at yourpersonalbank.com and stay tuned. I'll share more about this in the next segment, so don't miss it.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. And as I was stating in the first segment, we are in a rapidly changing economic environment. I mean, it is moving at warp speed, folks. To give you an idea, and when I say this to a lot of folks, it's amazing to me how many people are really unaware that just in March of 2022, this year, you could get a 30-year fixed mortgage in about 3%. Today, that same mortgage with great credit is 5.5%. Folks, by next month, it's going to be 6% because the Federal Reserve is raising rates aggressively. So in other words, the cost of borrowing in less than half a year has doubled. Okay? That has a huge, huge impact on the economic situation for businesses, for stocks, for real estate. And I hate to say this because I'm generally an optimist, but I got to be straight with you. It's going to get worse before it's going to get better. And that's just not me saying that. Even Federal Chairman Powell, Federal Reserve Chair, is saying the same thing. I mean, he's given recently a sobering prediction on inflation in the economy. They're saying they're going to have to raise rates a lot more than people thought and keep them higher than many people thought, and even what they were predicting and saying even recently, to tame inflation. Folks, how bad it's going to get, no one knows. But it's going to get worse before it's going to get better. And I think that is a very, very fair, safe assessment. So If you're still in the comfort zone of, hey, we're at easy monetary policy, the stock market's going up, real estate's going to be fine, or this is a short term correction, those kinds of things, I think it's time, if you haven't already, to come to the sobering reality that this is a bigger deal than maybe many people thought, maybe you thought. I've been saying this for quite some time, over a year on the radio show, that this is serious. Okay? 8-9% inflation just doesn't go away overnight, isn't caused overnight, and doesn't go away overnight. The economy of the United States is a good analogy. It's like a big tanker, oil tanker ship. And even when the pilot realizes that the ship is off course, and I don't think any reasonable person can think that our current economic situation is going down a good path, is on course. It's not. The vast majority of polls state show that. That even when the pilot, the captain, realizes, the Federal Reserve in this case, realizes, hey, we're going down the wrong path. And by the way, they realize that very belatedly, probably at least a year late, if not longer. Even when you start to steer that ship, even if you start to turn the wheel and change the direction of the ship to the right course correction, what does that big old oil tanker ship do? Does it turn on a dime? No. It starts to move very slowly. And it'll get there eventually. But it's going to take oversteering, that's the other part of it, for a longer period of time than most people realize to course correct. That is probably the best analogy I can give you about our economy at this point. If you haven't made changes to your assets, to your portfolio, to your investments, to recognize that course correction, folks, now's the time. I mean, I'm going to use the stock market as a good example because so many people pay attention to it. Yes, in the last month or so, there's been a recovery. It's not back to where it was. The first 6 months of the year was terrible. The worst in 70 years. The worst first 6 months in the stock market since 1950. That's a fact. Okay? Those numbers are facts, indisputable, and already have happened. After that point, in July, for the most part, August, we've seen a pretty nice recovery. Not back to where it was by any means, but it's come back some. And if you look at any bear market scenario, you see recoveries within the bear market. That's normal. Just look at any chart. This is not rocket science. This is common knowledge if you just look at a chart. The thing is, it gives a lot of people a false sense of, hey, the worst is over. Folks, even Goldman Sachs a couple weeks ago said there's another leg down. The worst is not over. And this fall, and they expect this fall or winter to see another leg down in the markets. The Federal Reserve has now come out after that and said, hey, we're going to raise rates more and longer than most people thought. What do you think is going to happen? Have you adjusted? Have you course corrected your assets, your investments, your portfolio, whatever it is you're doing to thrive in the new reality that we're in? And the new reality we're in is higher interest rates, high inflation, and a slowing economy. Folks, I think we're going to see more bad news, economic bad news, before we start seeing good news. And the reason is very simple. I've said it many, many times. The root cause of this economic scenario we're in is primarily twofold. It's the government spending too much money, creating inflation. And in the last month or so, our federal government has now spent approximately an additional $1 trillion over and above the normal $4 trillion a year it spends, over above the COVID relief, over and above the infrastructure package and everything else out there. And what I'm referring to, of course, is the last two bills that have come into law in place, and that was the Inflation Reduction Act, which even one of the co-authors, Senator Joe Manchin, states it's not designed to reduce inflation. Okay, many others have made the same statement now. And then this student loan relief thing that Biden has now uh, put in place or whatever through executive order. Now, I think it'll be challenged. We're going to see what happens, but the reality is, if these things go through, folks, there goes another $1 trillion spending. What does that do to inflation? Look, I don't really care what your political leanings are. I'm not talking about politics here. I'm talking about math. I'm talking about economics. The federal government and state governments too, any government has no money. And it's just infuriating when they talk about they're going to spend this, they're going to spend that. Folks, it's not their money. Where do they get this money from? And I've stated this over and over and over again, and I will continue to do so until we have a majority of people recognize this fact that the government has no money. They get it from taxpayers or they print more. Both of those are inflationary. And until the majority of Americans recognize that fact, and I believe they are finally coming around to that fact and realizing that. We're going to find out in the midterms a lot, aren't we? But I believe that's happening. And that's actually a good thing. Fiscal responsibility is something this country has needed for a long time. It's long overdue, folks. And I'm talking about both political parties, whoever's in charge. There has been too much money spent by this country for the last several decades. And frankly, it just keeps getting worse, not better. It has to stop, or we will continue to have economic challenges like we're seeing right now. Contact me at yourpersonalbank.com for more information on how you can weather this economic storm. Not only weather it, but actually thrive through it and succeed to this new economic reality.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. And I guess what I'm trying to share today, and I feel I'm trying to ring the bell. I've been called the town crier by some folks. I feel a little bit like Paul Revere. Hey, the British are coming. The British are coming. I've been saying this for a while, but what I'm trying to ring the bell for those who haven't recognized the fact yet is our economic reality has changed. It's not changing. It has changed. And I've had several people, and that's why I think I'm bringing this up so strongly today. Because in the past week or so, particularly after Jerome Powell shared recently how frankly, it was very sobering and gloomy prediction on inflation and the economy, and talking about how the Federal Reserve is going to have to raise rates probably far more than most people realized or thought, and for far longer than most people realized or thought, and even they themselves were saying before. It came as a shock. For example, the stock market dropped like 1,000 points that day. Okay, the Dow did. And I find it interesting, ironic, if you will, that it was a surprise. And maybe it's because, again, as I was starting to share in the last segment, I believe, that the human nature, the comfort zone, is so strong in so many people. Again, we get used to things the way they are. And the economy, the economic situation for over a decade was easy monetary policy. For so long, people got used to that. Folks, those days are gone. It isn't like they're changing. It's over, okay? If you didn't realize that, you missed the parade, man. Okay? It's gone. And what I want you to understand, and I'm not trying to say this to scare people or disillusion anyone, because what I'm saying is, I want you to be aware of the reality of where we're at. And it's over, and it's going to be over for a while. We are in a different environment. Now, it doesn't mean you can't thrive in this economic environment. You can. Like I said in the last segment, my mortgage broker client was stating, whenever the interest rates change like this, there's always winners and losers. In an easy economic or easy monetary policy, low interest rates and all that, the stock market and real estate markets and things like cryptocurrency, the speculative assets, if you will, tend to really thrive. The growth stocks and things like that tend to really do well. Folks, like I stated early, those days are over, done and gone. So those kinds of assets, those types of investments are going to really struggle. Perfect example. I met a guy today, literally. We were out camping and I saw my very first Rivian truck, an electric vehicle. He works for the company. And it looks like a beautiful truck and he really likes it and all that. But as he said, it's great technology and it's a great truck and all that. But as he stated himself, in this new economic reality, this was interesting he said this, it's gonna be interesting to see if the company survives. Because it's tough enough to start a new company in any environment with a new technology and everything else. But the economic world has changed, so it's even tougher now. We have to recognize that fact. Now, look, you can reposition things. You can go to interest rate sensitive assets, have lots of cash, minimize debt, things like that. I can help you do some of those things. Your personal bank is a perfect fit for that type of stuff. And why? It's because you have access to your funds. And you can also receive positive arbitrage when you access and use those funds for other purposes. Whether it's to pay bills, reduce the cost of borrowing, which is becoming more important every day now, if you're going to borrow money for any reason. But also, folks, to take advantage of the opportunities that are going to come down the pike. Here's what I want you to understand. Wealth, true wealth, is often really created in tough times. I had one of our favorite guests on a month or two ago, John Burley, real estate expert. He talked about how in these tough economic times, the professionals really succeed, and that's where they make their money. The amateurs get blown out. Okay? What I want you to understand is this. If you're all tied up in the stock market, for example, or real estate market right now, you don't have, or any market for that matter, and you don't have ready access to capital, or if you do, it's going to cost too much or be taxed, or you're going to lose too much to access it, folks, I'm telling you, you're going to miss out on opportunities. You're going to miss out on opportunities potentially of a lifetime coming up. I don't believe they're here yet. Again, as I stated earlier, the worst is yet to come. But I'm not a total pessimist because I still believe in the economic prosperity of this country. I believe that things will get better eventually, but we got to get there first. Contact me at 866-268-4422 or yourpersonalbank.com for more information. Again, 866-268-4422.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to Your Personal Bank Show. And for most of the show, I've been really ringing the bell and saying, look, if you haven't realized it yet, our economic situation has changed. It's not changing, it has changed in dramatic fashion and very rapidly, and is going to continue to do so for quite some time. That's not me. That's according to Jerome Powell, Federal Reserve Chair. Now, let's say you're one of the, but let's change tax here for a minute. Let's say you're one of those people, Ference, I'm with you. I get it. I've been watching, same thing. I'm with you on this. And I have a lot of folks that share that with me. So you're talking about potential opportunities we're going to see in the future. Well, what are you talking about? Well, let's go into that. Let's talk about some of those things. Because first of all, to be able to take advantage of those opportunities, here's what I want you to understand. You have to be in a position where you're not subject to the roller coaster ride. Your money you can't ride it down and then ride it back up and take advantage of those opportunities. You have to have some dry powder, is what they often say. In other words, funds that are readily accessible without any negative consequence, whether that's taxes or penalties or loss of value. So you got to diversify, folks. You need to be in a safe, guaranteed type of asset with high liquidity. And when you access the funds, getting positive arbitrage is icing on the cake. Your personal bank does that. It's one of the only assets that will do that for you. One of the only investments that will do that for you. Hey, why not make 5-6% returns on the money while you're waiting for opportunities? I talk. We're done on middle class and small business owners. Folks, don't be a fool. Don't believe what the IRS and the federal government is trying to say. Have some healthy skepticism. I know there's a lot of people that haven't. I like myself, but we really need to develop that skepticism of what the government tells us is like what a slimy used car salesman is like. I'm coming up on a hard break. I'm going to encourage you to contact me at toll-free 866-268-4422 or yourpersonalbank.com to create a tax-free bucket of money and reduce your target in terms of potential taxes going forward, because it's just getting worse as they spend more. Stay tuned. Welcome back to the Your Personal Bank Show. And in the last segment, I was sharing a lot about my frustration, my extreme frustration that the quote-unquote Inflation Reduction Act was passed and signed into law by Biden. It will increase taxes on everyone, every income bracket. It will increase taxes on large businesses, which of course means the businesses aren't going to have a tax increase. It'll just increase the cost of goods and services that are then sold to us. The $3.8 trillion that the current administration has spent since Biden came into office is just nothing more than fiscal suicide. This is money we don't have, folks. And that's on top of the $3 to $4 trillion a year they spend in their normal budget, which is frankly far too much already. So in other words, they just about almost doubled up. And that's after all the COVID relief stuff previous to that was done too. The amount of money that is floating in the system, I hate to be such a pessimist, but because generally I'm not. I'm usually an optimist, and I'm very optimistic about things. But from a financial standpoint, I can't see any good coming from this. This has got to stop. And the fact that they were able to pass another $700 or so billion spending spree, boondoggle, most of it going to green energy stuff, enhancements, less than 90 days before a midterm election. Either these people got extreme cojones, or they just don't believe it's going to impact them negatively in the midterms. Now, I think they're wrong. And I sincerely and fervently hope that they're dead wrong. Because that's another thing I want to bring up. We've been hearing recently how in the polls, because of these quote-unquote wins, the legacy media has been trying to tell us that the Democrats' hopes in the midterms aren't as bad as they were. Hold hope, folks. Stand firm, because the polls have been extremely wrong for the last number of cycles. And pretty much in every time, consistently wrong in terms of being in favor of the Democrats when they really weren't. We're going to find out pretty soon in the midterms what the American people really think. I think the biggest thing that's probably important, and what I point to, is over 75% of all Americans, that's all Americans, believe the country's headed in the wrong direction. And I think that in and of itself is probably the best indicator of where people are going to vote and where they're at. I think they're going to get shellacked. We're going to see. We're going to see. But a few other things. I guess the biggest thing I should say about this Inflation Reduction Act is, it's going to, like I said earlier, it's going to raise taxes on literally everyone. Folks, and you're going to have more IRS enforcement by a doubling of the budget for the IRS. They're going to be hiring new agents, more enforcement, more audits, which means likely subject to more taxes, penalties, or anything else for that matter, whether or not you did anything wrong, whether you filed your taxes on time, paid them or not. Particularly your self-employed person is going to be affected by this, your business owner, because they have deductions, business deductions, legitimate tax business deductions, that the IRS, when they come after an audit, I've seen this many times with many clients, when they try to get a business, for example, on do an audit and want them to collect more money, and when they can't find anything wrong, they'll just disallow business expenses, whether the business owner has receipts or not. I've seen it firsthand, folks, multiple times. They have to justify their time they spent on this business. And when they're wrong, they thought they were going to get more money out of this business, and they find out they're wrong. Again, the auditor, with little or no explanation, can just disallow expenses. Or say, you have these expenses, but I'm only allow half of them, or whatever it may be, which then causes that business to have to pay more in tax. And it's typically affects small business owners because they don't have the time or the money or the sophisticated lawyers and CPAs to defend them from this, and the IRS knows it. So they end up just having to pay it more or less in most cases to make it, quote unquote, go away. Folks, this is no different than extortion. This is Gestapo tactics. This is a country where we are supposedly innocent until proven guilty, but with the IRS, it's the opposite. You have to prove yourself, you're guilty, and you have to prove yourself innocent. And I've seen oftentimes, even when you do, they still don't accept it. And that's the sad reality. And when you have more agents, more enforcement, you're just going to have more of that. It's common sense. I know that's lacking in this world, but it's just common sense. And one of the best things I think you can do is reduce your how should I say, your not your overhead. I was trying to think, good thing to do with a business, but reduce your target, right? In other words, create some more tax-free income. They can't attack that. Your personal bank accomplishes that, folks, by having more of your money or redistributing more of your money into a tax-free bucket gives the IRS less ability, the federal government less ability to collect taxes or more taxes on you, or if you are audited or whatever, that is something that they just can't really go after. And the way our federal government has been spending money for the last several years, like an entire drunken Navy, not just a drunken sailor, but the entire Navy, okay, going on a spending spree, unlike the likes we've seen in human history of any government of any time ever. That's the significance of this, folks. I'm not trying to sugarcoat it with you, but they've spent more money than any government has in history. We now have more debt as a government, as a people, than any country in the history of mankind. What is going to happen to our tax rates? They're consistently talking about having people pay their fair share. And many people foolishly believe that means it's just going to be the rich. Folks, that's where it starts. Then it moves to the middle class. And even in this last recent IRS audit, performance audit, 73% of audits done in the last couple of years were done on middle class and small business owners. Folks, don't be a fool. Don't believe what the IRS and the federal government is trying to say. Have some healthy skepticism. I know there's a lot of people that haven't, I like myself, but we really need to develop that skepticism of what the government tells us is like what a slimy used car salesman is like. I'm coming up on a hard break. I'm going to encourage you to contact me at toll-free 866-268-4422 or yourpersonalbank.com to create a tax-free bucket of money and reduce your target in terms of potential taxes going forward, because it's just getting worse as they spend more. Stay tuned. Welcome back to the Your Personal Bank Show. And, I got to apologize. Well, you probably am feeling my extreme frustration. And it really boils down to our government continuing to spend money at a time recklessly wasting money during a recession and record inflation. And I'm frustrated because, like this article talks about, there's a record number of Americans who are now suffering, which happens to be the most since the Great Recession. When they did a poll on how many people were suffering economically in life, and when you're having money troubles, I mean, anybody who's lived through that knows it's extremely stressful, and to have that be imposed really upon you by an administration that just recklessly economically doesn't care, has no sense of fiscal responsibility whatsoever, not one iota that I can see. It's just incredibly frustrating because you see people suffer, and you're seeing people suffering needlessly. This is all self-inflicted. This does not have to occur. And again, it's because we have bureaucrats and we have politicians who gain power and control and money by spending. We have to wake up. The gravy train has to stop. We have to stop wasting money. And we have to punish those who do. Those that voted for these kinds of things need to be replaced. They need to be voted out. And not just by someone who's going to be Democrat-like, a moderate. No, we need somebody that's actually going to change the course, who's going to go not only stop spending the money, but start change the direction. And we need to set, folks, here's the reality. Nobody wants to say this. But our country needs to go on a fiscal diet. We need to cut back. We need to spend less than we're spending, not more. We need to be doing the opposite of what we've been doing.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. This show is designed to provide accurate and authoritative information. The presenter and guest on this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Products and riders may have limitations and may not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Compare when considering a replacement. Dividend rates and baseline of credit rates may change. Contact yourpersonalbank.com for current rates.